This is Trey Knippa with Kenai Capital Management on the floor of the CME Group in Chicago. The story around the world right now is in bonds. If you look at the U.S. Treasury market, the long end of the curve, the 30-year, it continues to work lower. Yields ticking up there. The 10-year now pressing its lows for this recent move. As much as the Fed, after they kind of spilled the beans about, well, we might consider some tapering, the market recovered after that as the Fed has basically come out and said, no, nothing to see here. We don't intend on tapering yet. And yet the market is taking out the lows that it made when it first started talking about tapering. This is going to dictate market direction for a while. And it's going to be very hard for stocks to continue to work up if interest rates continue to move noticeably higher. I think that the most overvalued assets around the world, I think that there's significant amounts of bonds that have a 90% reduction in price coming. I think that Japanese bonds are 90% overpriced. There's no way I would buy the bonds of either France, Italy, or Greece, not with anybody's money. And I think that they're very vulnerable. As much as these central banks want to hold them up, just like they're doing in Japan, just like they're doing in Europe, and just like we're doing in the United States, at some point the market's going to take over. At some point they're just not going to be able to hold those markets up, and thus they should. What's really sad is as we continue to talk about, oh, who's going to be the next Fed chairman, does it really matter? The two candidates that are being discussed right now, in my mind, are two sides of the same coin. They're going to continue to let the government borrow money that it doesn't have. It's going to continue to run up debt, and the Fed should be checking that. The Fed should be putting a stop to that. But instead, the Fed is enabling that, and it just isn't going to stop, no matter who gets, whether it's Yellen or Summers, no matter who gets that job. I just don't see that changing. However, when we should really be worried is when the Fed says we're going to buy an inordinate amount of bonds, and bonds still go down. And that's what's happening right now, and investors better be aware of it. This is Trey Knippa with Kenai Capital Management on the floor of the CME Group in Chicago.